Ever wondered what GST is and why it's crucial for your business? Allow me to unravel the mystery. The Goods and Services Tax, or GST, is a comprehensive, indirect tax levied on the sale of goods and services across India. It replaces a number of indirect taxes, such as VAT, service tax, and excise duty. It operates on a single rate system, with different rates applied to different goods and services. Here's how it works. When a business sells goods or services, it charges GST on the sale. This GST is collected from the customer and paid to the government. The business can then claim a credit for the GST it has paid on its purchases, preventing double taxation. Let's consider an example. A business sells a product for Rs100 with a GST rate of 18%. It charges Rs18 in GST, then claims a credit for the Rs18 it paid on its purchases. Now that we understand what GST is, let's delve into GST registration. So, what exactly is GST registration? I hear you ask. Well, it's the process of enrolling a business under the Goods and Services Tax regime. Now, this isn't just for fun. It's a requirement for businesses that cross a certain turnover threshold, which, by the way, can vary based on your state or territory. Once you've successfully registered, you'll be issued a unique 15-digit Goods and Services Tax Identification Number, or GSTIN for short. This number becomes your best friend in all GST-related transactions. And guess what? You can typically complete this whole process online through the GST portal. It's fast and efficient, taking around 2 to 6 working days. While GST registration is mandatory for some, others can choose to register voluntarily. The choice is yours. But remember, with mandatory registration comes the ability to claim input tax credits and access government benefits. Let's see who needs to register. Who should register for GST? A question that many businesses grapple with. Well, the answer lies in your aggregate turnover. Service providers need to register for GST if their turnover exceeds 20 lakh rupees in a year. For our friends in special category states like Arunachal Pradesh, Assam, and others, this threshold is 10 lakh rupees. Now let's talk about goods suppliers. If you're a goods supplier and your turnover crosses 40 lakh rupees annually, it's time to register for GST. There's a little twist here though. If you only sell within your state and don't deal in products like ice cream, pan masala, or tobacco, you can breathe easy until your turnover reaches 20 lakh rupees. When it comes to calculating this crucial aggregate turnover, remember to add all taxable supplies, exempt supplies, exports, and interstate supplies. Then subtract taxes, value of inward supplies, value of supplies taxable under reverse charge, and value of non-taxable supplies. Remember, the aggregate turnover calculation is crucial in determining if you need to register for GST. Now, when should a business register for GST and how can it be done? Well, a business should register for GST if it is required to do so, or if it believes there are benefits to doing so, even if it is not mandatory. This could be when the annual turnover exceeds a certain threshold, or when a business wishes to claim input, tax credits, and access government benefits. The registration process is straightforward and can be done online through the GST portal. You'll need to provide certain details, such as the legal name of your business, its PAN number, and the state in which it operates. After submitting the application, it usually takes around 2 to 6 working days to receive the unique 15-digit Goods and Services Tax Identification Number, or GSTIN. Remember, each business type might need a different GST registration. There are different types of GST registration in India. Let's understand them. Let's talk about the different types of GST registration in India. There are 4 main types, each catering to different business requirements. Firstly, we have the regular taxpayer type. This is the most common type of GST registration. Businesses with an annual turnover exceeding 20 lakh rupees or 10 lakh rupees in special category states must register as regular taxpayers. Next is the composition taxpayer type, designed for small businesses with an annual turnover less than 1.5 crore rupees. This allows them to pay GST at a fixed rate of their turnover. Then we have the casual taxable person type. This is for businesses that have a short-term presence in a state where they don't usually operate. Lastly, we have the non-resident taxable person type for businesses based outside India, but supplying goods or services within the country. Understanding these types can help you decide which one is most suitable for your business.